Hey guys, it's Jordan. I'm back here with Rick Fields, the managing and owning partner at Associates in Accounting CPA. And today we are just going to tackle a question that we got on one of our other YouTube channels from Amanda. And we'll just get right into it. So Amanda said, I would love to see more videos around the taxation slash legal implication that creators should consider when they're creating NFTs. And this is a really relevant question, Rick, because I'm actually working with another guy in the firm who was also going through this, created some NFTs, made some money off of this, and we're trying to figure out what's the best legal and tax structure to put all of this stuff inside. So I'll let you just kick it off and give us some opening thoughts, and I'll come back with questions as I have them.
Hey, Amanda. Thanks so much for your question. It's an interesting question because this has become kind of a hot, buzzworthy topic these days, and lots of questions going around with NFT creators, their creation, their sales, selling these things for cryptocurrency instead of selling them outright for cash. All of the things that go into that relationship really seems to cloud the tax situation for a lot of people, and yet it's not that complicated. So let's think about what's really happening here. An artist is creating a piece of art. That's a pretty common type of circumstance. It happens a lot. We've represented a number of artists over the years and continue to do so today, long before cryptocurrency was ever part of the world. So with that in mind, now you have something of value. Like every other art piece, there are no tax implications to that unless you sell it. The moment you sell it, the value that you receive for that, whether it's cryptocurrency, whether it's cash, whether it's somebody trading chickens with you, whatever you get, the value that you receive is now considered the sales price of that NFT. So with that in mind, now we've got a taxable transaction because a sale has taken place. The part that most artists don't want to hear is the fact that this is really establishing an art business. In effect, you're now in business for yourself, which means no different than any other business owner, you're subject to income taxes, you're subject to FICA taxes, which for someone who owns their own business is often known as SE taxes, self-employment taxes. You've got all these layers of taxes that come in and apply to this sale that's taken place. So now, even if you were running a lawn mowing business or an accounting firm for that matter, the advice doesn't really change much. There's going to be income taxes and Social Security and Medicare taxes, the SE taxes, that are going to be due. So there are a number of things that you can do that will help mitigate the amounts of these taxes, because unfortunately, self-employed business people pay the highest levels of taxes that it's possible to pay on this type of income. And we don't want that. We kind of don't like a lot of taxes around here. We work hard to eliminate all that we can. So one of the first pieces of advice is form an LLC. It's beyond this answer as far as the scope of why, but in brief, it simply allows us to make different choices as to how that income is taxed. It's not necessarily subject to every level of tax like self-employment income normally is. So we form an LLC that is now the business operation for your art business. Once we've done that, now the entire world of tax planning opportunities is in front of us. And our tax planning model looks at several things, but just again, as a brief answer to your question, we always look at how can we take expenses that are perhaps being missed. You know, an artist, they create things oftentimes out of their imagination. So as far as expenses, they don't really believe they have very many. And yet the internet is part of their life. Oftentimes office space in their home is part of their life, or studio space. In addition to that, phone costs, mileage, even in this very technology-driven world we live in, there are lots of expenses that can apply to that income. And that helps to reduce those taxes. In addition to that, how we choose to model your LLC and the income that you personally receive from it, very important part of how much taxes you pay. you can receive the same personal benefit out of that company in multiple ways, but some of those ways will create more taxes than others. And then finally, how we actually structure the LLC to have your taxes paid is a very important part of this as well. So the structure can be done a lot of different ways. And when you end up with a very valuable piece of art that you sell off, the taxes can be rather severe. The structure can save a lot of thousands in those types of situations. So those are the three basic components of tax planning here. In addition for that, the other thing that is so significant is making sure that you have a good plan that incorporates taxes into your overall financial planning. Because if you're going to come into some income through cryptocurrency, cash, or any other way, now you've got some choices to make about how you utilize that income going forward. And those choices also affect your overall income taxes that you pay. So short answer to your question, although this one certainly hasn't been so far, is that you need to make sure you seek out a professional doing what we do every day, which is basically taking these kind of situations, structuring them correctly, reducing taxes where we can, and helping individual business owners maximize the benefits out of their business by working on not just their numbers, but also the relationship, helping them meet their goals that they have financially and in their life. So that's an overall very simplified summary. The ideal time to get advice is before the sale ever takes place.
Yeah. Cool. So one follow-up I know that comes to mind for me would be, okay, I make this piece of art, and let's say I get paid in Ethereum for that art. Let's say I sold it for 1 Ethereum coin. And let's say today, when I checked, it was maybe $4,400 is what 1 Ethereum token is worth. Mm-hmm. And I got paid today, like this morning, for the art piece. But let's say in December, Ethereum plummets down to $2,000. Am I still on the hook for paying US taxes on $4,400 worth of income? Or I guess trying to clarify when do we convert to US dollar, and when do we determine what dollar amount we pay taxes on?
Right. And that's a good question with a bad answer. The bottom line is, to use your example, at the moment the sale takes place, that establishes the value for the sale. So if that number in your example was $4,400, that's our income from selling the art piece. Really simple, right?
Yeah.
Now, if the token drops in value from 4,400 to 2,000, like you mentioned, over a period of time, now we have a loss on the token. But right now, under current income tax rules, unless that token is liquidated or sold, we can't claim that loss. So the loss is simply a loss until we liquidate the token. And of course, the problem with that, being an investment-minded kind of CPA, is that if it goes down to 2,000, it's likely to go back up, right? Mm-hmm. So liquidation is probably a bad economic thing to do, but the only way to take advantage of that loss of the $2,400 in this example that we're discussing. But the sales price would be established at the time that the token was exchanged for the artwork. And usually because these things are volatile even during the same day, usually end of day type of value. So, you might take the token in the morning, the transaction might take place, might be worth $4,500 in the morning, $4,400 at the end of the day. It's okay to use an end of day value, not try to figure out the exact minute that the transaction takes place.
Okay. So I guess to take it one step further, so I get paid that 1 Ethereum, and you might have just answered this. I want to make sure that I just clarify. So I get paid 1 Ethereum, and then I wait 1 month. I got to claim that, let's say $4,400 as income, and then say it jumps to 7 and I sell it. That would also be the difference between the 7 and the 4,400. That would be capital gains taxed, and then you claim $4,400 as income. Am I thinking about that correctly?
That is exactly correct. Yes.
Okay, cool. And then one other thing, Amanda, that comes to mind for me is just making sure that you're getting with an attorney on this, especially if you're dealing with multiple parties. Because I know a lot of there's somebody who's creating the art, right? But then there's also developers who are writing the code for the different smart contracts. And maybe you're paying that person. So going back to Rick's example, if you were paying that person, that would be, and they were just treated as a contractor for you. They're not equity. They don't have voting rights, things like that. Then that would be an expense to go against any income that you had. And again, you'd report that either on a Schedule C or another business tax return like an 1120S. So that's one thing to consider. But say, hey, I don't have enough money to pay a developer or two developers to write all this code. So what I'll do instead is I'll give them some kind of equity stake. And it's very important. I know your question had legal implications inside of it. So making sure that you've got an operating agreement that's set up, how you're going to split profits, but also how you're going to split ownership of the intellectual property. So I didn't know if you had anything else you wanted to add to that, Rick. I knew that came to my mind more on the
No,
legal side.
Jordan, thank you. That's an excellent point. And to that end, anything along that line, especially, look, one of the things that's absolutely true, an example I use with a lot of our clients is if you're the only owner of a business activity, whether it's an NFT creating business or whatever type of business it is, the decisions are easy, right? You can make all the decisions. My favorite joke is you can have a board meeting in the shower. It's just you. It doesn't matter. Once you take on a partner, once you have someone that has an interest in a particular NFT or in your business overall, or anything that you might do along that line, the complexity of the business goes up incrementally very, very quickly. And Jordan's point is absolutely excellent. We have a lot of legal partners that we work with, not just in Kentucky and Louisville, where we're located, but around the country, that we frequently have to partner up with in order to establish the rules of the road of how two individuals are going to work together, have a common interest in an NFT or maybe in an overall business. Maybe you find someone that you would want to do this with every time you create an NFT. So from that standpoint, what you run into is that there needs to be understanding of how do we get paid? How do we share profits? How do we make decisions? You know, the board meetings likely are going to move out of the shower at this point, and there's going to be a function that's going to create the 2 or 3 or 4 or however many people are involved having to decide how they move forward in a particular way. So again, this is another opportunity. We do a great deal of counseling with individuals who are considering taking in a partner, a common interest type of individual, whether it's in one particular project or a business overall, about how to structure these things, ideally before they do it. Because at that point, the control is still in your hands, and you have the ability to make decisions about how you want to go forward with more than one person involved in the interest of the profits of the activity. So it's a pretty important thing to do. And Jordan, that's an excellent point.
Yeah, cool. Yeah, so I think that mostly covers, and that's all that we're talking about is on the creator side. On the investor side, the person who is purchasing an NFT and maybe holding it or looking to try to flip it and resell it, it's a totally different. That's a totally different conversation than the person who creates it. But your question, Amanda, was specifically, it looks like, about creating an NFT. So I hope that was helpful. I hope that it sounds like to me, you take that summary, but definitely need to go find some professional help on the tax side and most likely on the legal side. Even if it's just you, I think it's still helpful to have an operating agreement and have someone help you think through all the different liability that you're taking on, especially if you have code that breaks, have some kind of security outbreak where someone somehow steals someone else's NFT and they come back to you and have questions about the security measures that you or the developer you worked with took. So there's all kinds of things out there that could get sticky. And if you have at least had the conversation with a legal professional, you can at least try to think through those things as much as possible and create, you can either have insurance that provides legal protection for that, or there's all kinds of things in the legal world that you can do to add layers of protection. So yeah, Rick, did you have anything else that you wanted to add on at the end here?
Final comment about the importance of the legal situation. These things are new. NFTs have not been around that long. And so there is a developing body of law around the intellectual rights, around the products themselves, everything that goes with this. To that end, Jordan's point couldn't be more salient. It's absolutely critical to make sure that you know what it is that you're selling, how to protect yourself, how to go forward with that. And frankly, the LLC structures that we're mentioning will, to some degree, be part of that. So the overall tax planning, extremely important. Financial planning, also very important. From the secondary layer, though, making sure that you have liability protection and that type of planning is critical as well. So all of these things really mean that you need a team of professionals around you, especially if there's any significant dollars involved. So it can become the size of the revenue stream quickly creates an uptick in size of the liability risk as well. So it couldn't be more important.
Cool. All righty. I hope that helps, Amanda. Thanks so much for your question. We'll talk to you again soon.